Good morning. This is Georgie Zhang. I'm here again with Todd Baker. This is our third Thursday morning. And as predicted, it's been a wild ride. But again, Todd's here to help shed some light on the mortgage industry, what he's seen over the last week, what we're seeing in the market. We also want to touch on, let's just talk about some of these jobless claims, the unemployment numbers, maybe some things that we can offer to help. And then we'll wrap up the call. So good morning, Todd. How are you guys doing?
Good morning. I'm doing great, all things considered. We're just chatting, we're hanging in there, sort of looking forward to getting back to normal life like everybody else. Just taking it one day at a time. I'm feeling blessed to be an American because I think we have an extraordinary country. So I'm excited about that.
I think it's interesting that I guess, what are we in week 3 of quarantine, of hardcore quarantine? And I remember the first week, I thought, we're never going to make it through a week. I thought, we've got one more week. And now we're in the third week. It's hard to believe we're 3 weeks in. And so we can do this, and we will do this, and people are going to stay in and be smart. And if you have to get out, I think that we are seeing a change. We're trying to learn from what's happening up in New York, that we don't want that same thing happening here in Texas. So I just want to encourage everybody to keep going. We've come a long way when we didn't thought we could make it a week.
That's exactly right.
We are 3 weeks in. So with that said, I'm going to turn it over to you, and you bring us up to speed on the mortgage market, what you're seeing, any insights you have.
Absolutely. Okay. So since last week, the big change in the mortgage market has been first of all, the elimination by and large by most mortgage banks of any loan products with mortgage FICO scores beneath 640. Quick caveat, if you're a consumer watching this, the Credit Karma app that you're going to normally use or similar apps, those are great, but those scores could be lower than mortgages. If you go to get a mortgage, you need at least a 640 by most banks. We are a servicer. We service our own portfolio, and we're one of only 250 banks that sell direct. And I'll tell you, there's 2 reasons why that's important. We sell direct to the agencies, and what that means is that we can still offer those lower FICO products. But even what we did is we added risk layers on, meaning we want to make sure if you're a lower FICO, you have a few months saved up in the bank to cover the first few payments, that you have a good history of paying your rent on time, a few extra levels of protection to make sure, those are good habits you have. Because the reason why banks are skittish is because you could originate a loan, and then a month later, the person goes into forbearance. And then you as the servicer, you have to pay the investor whether you're getting paid on that loan or not. So what's happened is the low FICOs were deemed risky. So that's number one. The second thing is the down payment assistance programs. The programs are still there, but virtually all banks have suspended them. And in those programs, they've been suspended because if the borrower misses the first payment, as the bank that originated, you have to keep that loan on your books, and there's no outlet to ever sell them. So you have to service them forever, and those are originated as a nonprofit thing anyways to help the community. So you're stuck with like a losing proposition. And if you are able to sell it, it's on what's called the scratch and dent market, which you might get 90 cents in the dollar. So imagine if you did a $200,000 loan and you got 90 cents in the dollar, you've just lost a significant amount of money. And if you have a big pipeline, you can't sustain that. So most banks have cut those off. And then the last thing is, and this is the phenomenon that everyone's going to be dealing with right now, is the way the mortgage market operates is mortgages are originated, then they're packaged up and sold as securities, and there's a servicer that collects payment and then an underlying investment behind that receives part of that investment each month. So it gets sort of complex, but the investors that are buying mortgages as of last Thursday stopped buying them. So unless you pay points. So any bank now, almost all banks are having to charge 3 to 5 points just to originate a loan. And what a point is for people watching, that's 1% of your loan amount. So that, just imagine if you had a $200,000 loan amount, 5%, that's an extra $10,000, so you can't really do that without either the seller paying, or we were able to, because we can sell direct, we can still securitize our own mortgages and offer the really good rates. So the rates are still really good, but we can offer it with a reasonable amount of points, like 1 point, 1.5. So we're actually in a good position to help the community out that way. The market today, you mentioned unemployment claims, and maybe we could segue into some other things you want to talk about, Georgie, but that we all knew that'd be super high. The Treasury Secretary, Steve Mnuchin, has already said, hey, we're not worried about that. We know it's going to be high. We know why it's there. stock market didn't, shed 2,000 points this morning. I think it opened up like 150 down because it already knows that the claims are going to be high. There's so much help coming from the government. We're going to be okay. So that's not entirely unexpected, but I know you have there's some exciting opportunities out there too. I know you wanted to talk about. So go ahead. Yeah, go. Why don't you share with me?
And Todd, just to kind of wrap up on the mortgage side, if you are someone out there who is needing down payment assistance, if you were pre-approved for that, and you were in the process of purchasing a home, does that affect those folks?
Yeah, most of those people have been cut off. What we did, most banks just cut them off immediately. So you heard a lot of stories in the realtor community on social media and other outlets where, hey, I was supposed to fund my loan tomorrow and I can't now. So a lot of banks just immediately pulled out. We basically said, hey, from this date forward, any new things we're not going to do. That way, we didn't just, once again, we're a realtor-based company, so we're not going to and a community-based lender. We're not going to disrupt the existing promises that we made. We fulfill those. But going forward, we put these new rules in effect, and they're not for long. I mean, it could be 90 days or 6 months. It's not going to be forever. But just for right now, we needed to do that to protect ourselves, and every other bank did as well.
So when people are applying for mortgages, and so there's just still a lot of confusion, and even just all the data you gave us it's fabulous information. I hope people go back and watch this, 2 or 3 times to really grasp what you're saying in this, in the mortgage industry. But there's still a lot of confusion. People think they hear, low interest rates. We talked about that week 1, the difference between the long-term bond market and the Federal Reserve and how that affects that. Would you recommend right now people looking at mortgages? Is this a good time? If they do, is it predominantly on the refi side? I mean, just
last night, every morning we get a report. Yesterday we had a fairly significant lock volume. We over 50% of our locks, meaning loans that went into processing, were actually purchased. The other 50% roughly were refinances, including cash out. It's a great time to get a mortgage so long as you're working with someone that can provide. The rates are still good. Here's the thing: the rates are fine. It's just that they're coming with all these points. What you want, and it's okay to have a point, just prepaid interest. It's okay to have a reasonable amount of points, like 1, maybe 1.5, but you can't pay 5 points. You're not allowed to, and you won't want to, right? It defeats the purpose. So that's the one caveat. It's a great time so long as you're working with the right company that can give you the right offer.
Okay. And just for some of our early investors, I have a lot of first-time home buyers. So these terms are kind of new to them. When you say points, tell us what that means.
So a point is a concept that's very unique to mortgage loans. Mortgage loans have the ability to prepay interest. And so because mortgages are bonds, you can get a range of an interest rate. So you can say, for example, let's say 3.75, you could pay 0.5% of the loan amount up front. Whereas if you go to 3.375, you may pay 1% up front of prepaid interest, but you get that lower rate. So simply put, it's prepaid interest. You can pay a certain amount of interest up front in exchange for a lower rate. Okay. And so what I'm saying is that right now many banks are saying to cover their risk, they're making you pay like 4 or 5% up front, which is not possible for anybody. So
and so you recommend it, and this is another important thing, not all mortgage companies are the same. This is why you do need to talk to multiple lenders, because they do vary just based on what you're telling me. Some banks will charge this much and some will charge minimal.
Well, you don't necessarily need to talk to multiple lenders, but you definitely have to talk to the right lender. I mean, you need to be asking the right questions, okay? Because here's the thing. I don't encourage anybody to shop if they're talking to me, obviously, because I'm going to take care of them, right? But the same token, as a consumer, the idea that you shop to save money is not relevant for mortgages. These are long-term, complex situations. You want to work with the right person that understands the market, that understands how to get you the lowest cost mortgage with the highest net worth rate of return to you and your family. Mm-hmm. And the question is to be asking now, though, as consumers, like how long does it take to close? Get a quote, look at the points up front. If they're charging excessive points, you need to be working with somebody that's going to give you a reasonable offer. That's the bottom line. How soon can they close? And little things like, are they calling you back timely? Are they responsive? If they're not doing like the normal customer service things, that's a big red flag that they're not operating well in this environment.
I could not agree more. And I will tell you, to our audience, I have worked with Todd on many a deal, even a unique deal that came up yesterday. He found a creative way to help us put in an offer. that puts us in a really good position for a couple that is excited about making a home purchase. So for that, I really do appreciate you, Todd, doing that. To wrap up today, we talked a little bit about the unemployment numbers that came out today. And, I just had a call yesterday with a recruiter, and they're talking about how many jobs are available. I mean, some of these recruiters are just so swamped. I mean, thousands and thousands of jobs, predominantly in the banking and mortgage industry. Obviously, healthcare, IT is getting a big bump.
But shipping, warehouse workers,
Yeah.
I mean, there's a lot. Yeah, anything supply
Amazon,
chain related.
Walmart,
Yeah.
both are hiring, in the thousands of people. And so I'm sitting there thinking, you hear about these unemployment claims, which we know some of that is they have to file unemployment to get that extra money out of the stimulus package. I mean, so some of that's to be expected. But I think there's a lot of people in our audience too that, may find themselves needing a job, even if it's temporary. And what I'd like to offer out there is that if you can send me your resume and I will send it to the recruiter network that I have, because they are looking to place people. And if there's anything we can do to help this or help the situation, we are all in. So no promises, but I'd love to put my email address, my personal email address out there. If anyone is looking for a job, feel free to send me your resume. I will forward it on to this recruiting network. Sometimes you just don't know where to go to get these jobs. You hear about them, but how do you actually, get out of the top of the pile? Maybe we can help there. I don't know, but I certainly like to make that offer.
Let me see if I can share the screen with there you go. So you can see that now, right?
Yes.
So there you go. So there's Georgie's contact information for everybody.
There's my contact information. So send me your resume. You can text me if you need to, if you'd like me to put you in direct contact with some of these recruiters. We will get that information out. We would love to be an asset here to help those that are looking for jobs, looking for new opportunity. And that's what happens here a lot of times. Sometimes we are forced out of our comfort zone into careers that turn out to be something amazing. I'm personally someone that experienced that. And let me tell you, it's scary, but on the other side of it, man, is it worth it? So just want to make that offer out there. And once again, Todd, just thank you so much for your time. Great information. Let's get back together again next Thursday, take a litmus test of where everything is. And everybody go out and encourage somebody today. We need some encouragement for sure. It's tough out there. Focus on the good, because there's a lot of good going on. And I just appreciate you and our entire audience.
All right. Well, thank you. Yeah, we'll talk to you next week.
Thanks, Todd.
Bye-bye.